This week's big financial headline reads that the Bank of Canada doubled the overnight lending rate. So what does this actually mean and how does it impact home buyers? Well, let's dive into this. The overnight rate went from 0.25 to 0.5%. And yes, this is the first rate increase since March of 2020. And yes, it did double the interest rate. However, the current cost of borrowing is still pretty low compared to historic standards. Not surprisingly, this rate increase translated into an increase in mortgage rates as it influences the prime and lending rates that the banks offer their clients. First, let's look at home buyers that have already purchased a home or been pre-approved and have locked in their rates. If you're in a fixed rate mortgage, this rate increase will have no immediate impact. Rates are locked in for the term of your mortgage. If you're in a variable rate mortgage, you will see an increase as the banks adjust their prime lending rates. But if you break it down into actual dollars, the numbers are not so daunting. A rate increase of 0.25% results in an increase of about $13 per $100,000. So for someone with a $700,000 mortgage, that's roughly about $90 a month. Now, of course, if rates continue to increase, then that impact would further increase. And the Bank of Canada is expected to bring its key interest rate to about 1.25% by the end of the year. Will this have a devastating impact on homeowners and result in a pile of foreclosures? Probably not. In Canada, borrowers have to meet a qualifying stress test. What this means is that they will have to qualify to a prescribed rate which is higher than the rate of their mortgage. The current qualifying rate is 5.25%, or the rate that's being offered by the lender plus 2%, whichever is higher. So there is already a cushion built in to make sure that borrowers can weather an increase in interest rates. What about someone who is just starting to look at homes and has not locked in a rate yet? That's a whole different matter. A 1% increase in interest rates can translate to about an 11% loss in buying power. This is adding more buying pressure to our current market as potential home buyers who are anticipating the rate increase are trying to get ahead of this by making a purchase today. If you're seriously considering purchasing a home in the near future, you may want to keep an eye on the interest rates. If you're looking to buy or sell a home, let me know. I'm Joseph Go, your go-to guy for real estate on Vancouver Island.